I just want to get your take on Draghi. What his comments this morning meant to you, imply for the investor.
Yeah. I mean, we're all waiting for the QE really, and maybe this is edging us closer. I think the problem he has is that he has a toolbox, as it were, and the final tool is QE. And I still think there is a political resistance to it, particularly from the Germans. So he's playing a game of biding his time and hoping that the second LTRO, which comes in December, might get some stimulus. The weaker euro might begin to help GDP growth. And I think he's very reluctant to press that full-scale QE, although the market wants him to.
I mean, I mentioned the equity market reaction. It's been supported. I mean, we've got the euro up here. I mean, that's clearly pulled back, but we've got the equity market reaction. It's looking pretty good. Is it time to be a little bit more optimistic in Europe?
We're trying to be. I mean, I think people are very downbeat on Europe. People seem to be very pessimistic. We've had quite a lot of, negative prints on economic indicators, and the glass is sort of half empty, with inflation levels, etc., and people being very downbeat. And we're trying to sort of think, well, let's be more positive. Let's think about the benefits that the economy might see with the lower oil price. The weaker euro will stimulate exports, and the valuation's attractive against the US market. So we are trying to be more optimistic and think about a glass half full rather than half empty.
And what's in that half full? Are the banks in there at all? I mean, we've talked about the banks before. What do you think of the banking sector now in Europe?
Yeah, I mean, the banks. There was a lot of analysts being very bullish on the banking sector ahead of the AQR. This great cloud was going to be lifted, 5 minutes on Monday, and they've been incredibly weak ever since. A lot of people are very underweight. It's a very under-owned sector. They have come back. I mean, they were trading on quite high multiples. Now you're paying sort of 1x book in some cases for return on tangible of 10 or 11%. So we're beginning to think there might be value in some of them. You've just got to be very careful about the litigation risk for some of the investment banks, which I think is still a problem, and some of the capital ratios are still quite low, but that's an area that I think is worth exploring, particularly relative to insurance stocks. So insurance stocks have done very well against banks, and I think that's a trade that a lot of people have played, and maybe they've sort of thought about the other side of it now.
All right, just a final question on this UKIP win. To what extent is that election risk seeping into sentiment now in the UK?
Yeah. I think it has to. I mean, as we go into the new year, the May election is the second win. We'll start scrutinising every poll, looking at any other local by-elections that come in. It was a targeted seat for them. They won it, so it has to be a concern, definitely.